Hey guys, I'm Manisha Gupta and you've tuned into Moneycontrol, and we have keen eye right now on the crude oil prices, which have declined 5% overnight. And if you look at the last three trading sessions, the Brent is down by 10%, WTI is down by 12.5%. So it has been a very sharp fall in the crude price. It's so much so that we are trading at a 15-month lows right now with the prices. If you look at the range in this year until now in 2023, we've seen a high of $88 a barrel for the Brent crude prices, and from those kind of levels we've seen a low below 74 as well. So it has been nearly $16 of a range that we've already made for the crude oil prices. Also, the pressure comes in from the fact that the US dollar index has risen. There is enough supplies in the market. The US also has seen an increase in inventories. The Russian impacts until now have not had an impact. So we are looking at Russian supplies also coming into the market. There was a knee-jerk reaction when Russia said that they were going to cut output and export starting the month of March. We haven't seen much impact of that as of now, and the imports in China, India continue to be quite robust. Markets actually believe that for this year, you could be looking at the Chinese demand growth anywhere between 800 to 1 million barrels per day, and that 40% of the demand, incremental demand growth, would actually be coming in from China, maybe 10% of that in India, 15% from the OECD countries. But much of that will start showing only by the end of second quarter or the beginning of third quarter, that is the second half of this year. So until then, the choppiness could just about continue. It's going to be about the macros as well, because we have seen the interest rate hikes continue to weigh onto the markets. The risk aversion that we have seen also weighs on. And remember, a lot of banks and brokerages are still bullish on crude, and that is the reason the hedge funds, the money managers, had made long positions in crude, and we see many of those longs being liquidated right now. That's another reason that you have seen a decline. So the market believes that there could be still some decline left from here. We're trading at around $75, $74 a barrel. You could see prices going to 70 to even 70 for that matter. But that is not where the crude prices will sustain. You will eventually see crude prices come back. An average of $80 a barrel is what we are perhaps looking at for the next 4 or 5 months as well, with most banks, brokerages, institutions telling us that $90 a barrel, even 95 in the second half is a probability, because the supplies is what we're seeing as is slightly on the dim side, while the demand opportunities are much higher, and much of that clearly coming in from Asia and not US really. So that really could be supportive. So moving on from here, even as we are trading at a 15-month lows for crude and 1 year low for heating oil and natural gas prices, the expectation that you will see better demand going forward clearly supportive, but not for the near term, because you have ECB interest rate meeting today. You have the US Fed meeting on 22nd of March. Until then, the commodity prices could be choppy, but going forward, it is going to be quite strong, as most people tell us.